Hello, welcome to Geojit Spotlight. The new year began with the market moving to a correction mode. Nifty corrected by about 11% from the September 2024 highs. The recent correction in mid and small caps was sharp and in certain stocks brutal. On January 13th, when Nifty corrected by 1.4%, the Nifty mid and Nifty small cap indices corrected by more than 4%. Therefore, the actual fall in the market is much more than what the 11% fall in the Nifty indicates. In Nifty mid cap 150 index, 75 stocks corrected by more than 25%. In the Nifty small caps 250 index, 130 stocks, more than 50%, corrected by more than 25%. In certain stocks in the broader market, the corrections the crashes were around 40%, even more. Therefore, investors with portfolios having more mid and small caps will be feeling much more erosion in their portfolio value. They will be feeling much more pain. Going forward, what are the challenges? What are the prospects? Let me make one thing very clear. The big bull market rally, which took the Nifty from the low of 7,511 in March 2020 to the high of 26,277 in September 2024, is in pause mode now. That phase is over for now. If Nifty is to break the all-time high of 26,277 and move higher, it will require fundamental support from GDP growth revival and earnings growth revival. This will take some time. Till then, investors should focus on segments with growth visibility. That is, segments like pharmaceuticals and healthcare, IT, discretionary consumption, and fairly valued segments like high-quality financials. In brief, segments which will not be impacted by the growth slowdown in the economy will continue to be resilient. They will continue to outperform. In the near term, markets globally will be influenced by the policy decisions of President Trump. During his campaign, Mr. Trump had declared that he will increase the tariffs on imports to the US. He even threatened to impose up to 60% import duty on imports from China. If he walks his talk, that can be problematic with serious consequences for global stock markets. But President Trump is unlikely to walk the talk. He is likely to start with much smaller tax increases and try to negotiate from a position of strength. That is what the currency and the bond markets are signaling. As the inauguration day of President Trump approaches, the dollar index has declined from the peak of 110 to around 109 now, and the 10-year US bond yield has declined to 4.65% from 4.79% a few days ago. If this trend continues, it will be good for emerging markets like India. The intensity of FII selling will decline. The level of uncertainty is high, and therefore investors should give priority to safety. Remember the wise words of Warren Buffett. I quote, "There are two principles of investment. First principle, never lose money. Second principle, never forget the first principle."